Hello everyone, welcome to today's edition. And on today's edition, I'm going to be explaining what is indicators and functions and importance of indicators. Yesterday, I explained it in my VIP signal group yesterday. I explained what is indicators, function of the indicators, and how you can add indicators to your trade. So if you are not in my VIP signal group, you can join us now. I'll be getting signal group, signal trade every day and other market information. So let me take you back to our group where I explained indicators yesterday. So indicators are very important tools in trading because indicators is going to tell you where the market has already been before and where the market is currently and where the market is going. It's going to give you direction of the market, where the market is going, and when you can enter the market and when you can leave the market. It's going to tell you, and it's going to show you the trend. It's going to show you where the market is, the charts. It's going to give you a clear direction of the market. Do you understand? And the importance of the indicators are they are very good for risk management. That means you don't need to just to waste all your money or your capital in trading. They're very good, and indicators help you to predict market behavior. So it's going to show you the direction of the market. By then you can now predict, okay, this market is going bullish or this market is going bearish. So let me take you to the chart. If you log into your account, maybe your Bybit, any exchange you are using, this is what we call chart. This particular box, this particular place is what we call chart. The red candle, the green candle. We all know what the red candle and the green candle is. The bullish and the bearish. Now if you check your chart now, you can decide, okay, this market is going bearish, let me enter. This market is going bullish, let me enter. Without the help of indicators, you are going to lose your capital. But if you add indicators to this particular chart, it's going to tell you the direction where you are going to enter, this particular chart. Now the first indicators you are going to add is a moving average, which is MA. This is it. Moving average, MA. What is moving average? Moving average is the indicators. They are moving with the market, with the candles, both the green candles and the red candles. They are telling us the movement of that market at that particular time. Let me just say, let me call moving average as our security, our CSO. If you have a security, your CSO is going to know where you are going to. It's going to know your condition. It's going to know everything about you. That is the function of moving average. The moving average is going to show you the movement of that coin, where the market is going and where the market is at that particular time. The current movement of that market. That is the function of moving average. Let me add it to the chart now so that you can understand. And don't forget, there are some indicators that are going to show in this chart, where why some indicators are going to show at the bottom. Not all indicators are going to show at the charts. Few of them are going to be showing at the charts, while some are showing at the bottom. The moving average is going to be showing on your chart box like this. Sorry, on your chart like this. Can you see? This is the moving average. They are going to show on the chart like this. Don't forget, when I start this video, the only thing that show on this chart is just the green candle and the red candle. Now that I had moving average, you can see some lines, 3 lines, which is yellow, purple, and blue. These 3 lines are called indicators, moving average indicators. And if you check the 3 of the 3 lines, check their movement, you see that these 3 lines move down, showing down direction. And if you look at the red candles of this chart, is moving down. That means that this particular trade is going down. And what moving average is telling us also that this particular chart, this particular trade is also going down. That is the moving average indicator. Moving average indicators is also similar with MACD, also the same thing. But the difference between the MACD and the moving average, moving average is going to show at the chart box, while MACD is going to show you at the bottom. Let me add MACD. This is where the MACD is. It's going to show you at the bottom of your chart. It's not going to show you here. That is just a little different. And the second difference is that the moving average has two lines. The moving average has 3 lines, while the MACD has 2 lines. This is the 3 lines of moving average. Then the MACD has only 2 lines. So that is just the difference. But the same thing, the two indicators are telling us the same thing. Two of them are telling us the market, where the market is going, the direction of the market. If the market is going up, these two indicators are going to tell us that this market is going up. If market is coming down, these indicators are going to tell us that this market is going up. By then, you can now make your own clear you can now make your clear decision. Maybe you are going to enter the market or you are going to leave the market. And don't forget, I also explained it in my trading group yesterday. Indicators like moving average and MACD help trader identify whether the market is in an uptrend, downtrend, or ranging side. So that means that this particular chart, this particular indicators help a trader to know maybe the market is ranging, maybe the market is downtrend or uptrend. Do you understand? So that is what they are just telling us. That is the function of these two indicators. Then the second indicator is RSI. Don't forget I say that there are some indicators that is going to show at the bottom, while some of them are going to show at the main chart box. So if I had indicators of RSI indicators now, it's going to show us at the bottom. Can you see? This is RSI indicators showing at the bottom. And RSI with MACD, with the moving average, also has 3 lines. The purple, the yellow, and the blue lines. They also have 3 lines. And each 3 lines also say the same thing. Overbought and oversold. When the market is pumping, that is overbought. When the market pump, maybe there's a big investors in that particular coin, they invest more. Let's say now the Nigerian government invests in this particular coin. Now you will see that this particular coin will pump very well. This particular coin will move higher. That is Nigeria's government are an investor in this particular coin. And if this particular signal, indicators lines, this particular number move higher from this particular numbers now, the RSI 16 it says 13.2, RSI 12 says 12 points, RSI 12 says 28.2, RSI 24 says 41 points. If the market pump, you are going to be seeing big number like 50, 60, 70, 80, 90. If your chart is showing you big number like 60, 70, 80, 90, that means the market has already gone up like this. Let me show you. Like this. That is overbought. That means the market has already pumped. If the market is going up, the RSI number is going to be showing you bigger number like 60, 70, 75, 80, 85, 95, like that. These 3 lines is going to be showing. This overbought is telling us that this market has already been pumping, or the market is pumping. And you can only get the maybe the market is pumping by checking your RSI. The RSI is only is the only indicators that will show you the numbers of times this market has already pumped, or maybe the market has already dropping down. The RSI is going to explain it deeper for you. Now if you check the RSI now, you will see that this number is just small number, 12, 28, 41. That means that this market is coming down. That is what this RSI is telling us now. If you see number that is below 50, any number that is below 50, that means the market is coming down. But if you see any number that is above 50, 55, 60, 70, that means the market has already been pumping. Maybe the market is pumping at that particular time. That is overbought. Now, this is oversold. The market is coming down. The market is coming down. And these numbers can also be going down as well if this market keep going down, downtrend. So the more this chart is coming down, the more the RSI number will also be showing you small number, 12, 10, 9, 11, 8, something like that. That is the function of the RSI. The RSI will show you the numbers of time this market has already pumped or when the market has already dropped. That is the function of RSI. And the RSI indicators also show at the bottom of the chart, not on the main chart box. Not on the main chart box. And it's going to show you the direction of the market. You can now use the direction, you can now use the both the moving average, the MACD, and the RSI to predict your chart. Okay, should I enter this market now? And don't forget, these indicators also work with the time frame. This we are using 15 minutes time frame. If I change it to 1 hour time frame now, it's going to show you us another different movement. Let me show you on a 1 hour time frame. Can you see? Can you see the RSI number? Can you see the RSI number? All the indicators work with the time frame. If you set your time frame with lower time frame or higher time frame, the chart will tell you the movement of that particular coin based on your time frame. And if you want to be doing a scalping trading, you want to be making money fastly, you want to be leaving the market fastly, the best time frame is from 5 minutes, 15 minutes, 30 minutes. That is the best time frame you can be using to make money and fast and leave the market. So this is the best time frame, 5 minutes, 15 minutes, 30 minutes. You just want to make money and leave the market fast way. That is scalping. But if you believe that, okay, this market has already been downtrend before, and maybe after 1 hour or 2 hours the market will pump again, you understand what your chart says, you can use 1 hour, 2 hours like that time frame to predict your market. That means you want to stay long. And this particular, you can use if you are using a DCA strategy, dollar cost averaging strategy, you can also use bigger time frame like 1 hour, 2 hours, sometimes like that, so that when the market starts pumping, it's going to be giving you higher profit. Do you understand? And these time frames work with the indicators, any indicators you are using. Do you understand? Any indicators we are using. The third one is EMA. And don't forget what I said earlier, that I said that there are some charts, there are some indicators that we show on the chart box, while some will show at the bottom. This EMA is also showing at the chart box, like moving average. The EMA is also showing at the chart box, like moving average. MACD and RSI are showing at the bottom chart. I hope you are understanding very well now. There are some indicators that will show on the chart box, while some will show at the bottom. So this particular chart, they are all saying the same thing. This particular chart, they are all saying the same thing. As a trader, you just need to apply everything together and make your direction and predict your market. Let me take you back to our group where I explain the what's it called, the EMA, or maybe I don't explain it there. The EMA is also like a moving average. All of them are saying the same thing. The moving average, the MACD, the RSI, all of them are saying the same thing. So you as a trader, all you just need to do is to just use all the indicators, apply all the indicators together and make your direction. Or your movement, your prediction. Maybe you are going to enter a short trade or you are going to enter a long trade. And before you can conclude on your entry point, make sure you check other time frame. Don't just stay on one particular time frame and say, okay, let me enter the time frame. No, you need to check other time frame. Check what other time indicators are showing or telling you before you can make your conclusion. If you just stay on one particular time frame and enter a market, the market can give you profit and also give you the other side of profit. I hope you know the other side of profit. That means you are going to lose the money. So, but if you combine the time frame, the chart, and everything together, your indicators together, they are going to tell you the particular movement of that coin. And yesterday, I also explained some important indicators, popular indicators to use, volume indicators, MACD, and other indicators. These volume indicators is here. It's going to tell you, I'm not sure I add it to my this thing, but I had Bollinger here. Yes, Bollinger. This is Bollinger. Some traders don't use this Bollinger something because this Bollinger show you the I don't know how I can put it, or let me say it show you all this movement of that coin from the past. It show you all the movement of that coin from the past till the current movement of that particular market. And it's also show on the chart box. So this Bollinger shows that where the market has been moving before, combine everything together. If you combine everything together, and there's no way this market is going to go, the Bollinger is going to know the direction of that market. So if you want to combine everything together, you want to know the direction where you can enter the market, make sure you use other time frame, check other time frame. That is when you can enter the market. Don't forget, there are some indicators that will show on the chart box, while some will also show at the bottom. Moving average will show at the chart box. EMA will also show at the chart box. This moving average and EMA and MACD, these three indicators, they are very close indicators because they are telling us the movement of that particular market. Let me off these three indicators. I've off the EMA, I've off MA and EMA and off MACD. The only chart we have now on the chart box is Bollinger. And don't forget, Bollinger also has three lines, both yellow, purple, and blue. I mean, two lines, yellow and blue. Can you see on the chart box now? Can you see? So this one is going to tell you where the market is coming from before and where the market is presently. So you can add it, but for me, I don't add Bollinger to my charts, if I should be honest. I only had MACD, EMA, moving average, EMA, and MACD. I don't add Bollinger to my chart. Do you understand? But if you understand these three indicators very well, you're going to be making profit. No matter how, you're going to be making profit because they're going to tell you the direction of the market clearly, and also the RSI. They're going to tell you the market movement clearly. So if you're a trader, you need to understand this very well. Now let me change from this 1 hour time frame to 30-minute time frame now, and we can now predict the market. Maybe we are going to enter long or short. Let me show you the 30-minute time frame. This is the 30-minute time frame. The only thing that is similar since I've been using 15-minute time frame, 1 hour time frame, is that all these lines are also moving together. None of them has moved up. Check it very well. All these particular lines, can you see their amount here? They are also showing downtrend. That means the market is coming down. If the market starts going up now, you see that these three lines, all these lines, there are more than three. All these lines are going to show uptrend. That means the market will be pumping. That is what it means. That means the market is pumping. That is what it means when the three lines could show up. If you check from this side, from this particular side, you see that the market move